you heard their GDP bouncing back in January. Look, it's one data point, so it doesn't make a trend, but what does it tell us about the health and strength of the UK economy right now?
I think you're right to take it with a slight pinch of salt. I mean, the fourth quarter was very volatile. We know the fourth quarter as a whole, we saw GDP contract. There was a lot of volatility at the end of last year in some of the production numbers. We saw a really odd, sharp fall in retail sales back in December, which rebounded entirely in January. So things are bouncing around a little bit, but I think things are getting better. So we would expect this trend to continue in terms of the monthly GDP numbers. If we look at real wages, for example, while inflation is coming down very quickly, currently 4% on a headline basis, but in April we get a sharp fall in household energy bills, probably the same again in July. That's going to drag headline inflation below 2% at a time where currently private sector wage growth is 6%, probably won't go below 4.5% much before this summer. So positive real wage growth, that's really helping. And the mortgage squeeze, most of that we think has come through now. So the prospects for the UK economy are getting a bit brighter.
Okay, so if this will mark the return of quarterly growth prints through the year, at the same time we have rates coming down in the UK likely, and at the same time energy prices coming down as well. What are these numbers going to look like over the next couple of quarters? Because there's still obviously the risk that this is just one print in a series of many more to come. So how do you expect the trend, if we can even call it that, to unfold from here?
Yeah, I don't think we should get too excited, but I think probably as a rule of thumb, as we get further into the year, the numbers probably get better. So you probably return to something like 0.3% quarterly growth numbers, maybe into the second half of this year. I mean, I mentioned the mortgage squeeze. So what you've got to remember in the UK is most people are on fixed mortgages, but not the fixed length isn't very long. So people are still refinancing off, sort of pandemic era low rates onto these higher rates. But we estimate about 2/3 of that mortgage squeeze has already happened. And probably by the summer, about 80% will have happened as more people refinance. So probably into the second half of this year, that drag from higher rates will have largely come through. You mentioned rate cuts. The Bank of England, I think, will have cut rates by the summer. So that will start to help things as well. And, that real wage story just builds through the second quarter. So I think probably third and fourth quarter is when, with a bit of luck, we're back to 0.3% quarterly growth readings, which is respectable, if not totally exciting.
It's also good news for Rishi Sunak and the Tories, who have really battled to shift the narrative on the question of Sunak's economic management. Should we expect a bounce for the Tories off the back of this as well?
Well, let's see. I mean, we don't actually know when the election is going to be just yet. I think most people are assuming it's going to be in the autumn at some point. So there's still a long time to go, potentially. I mean, we've obviously just had a big set of tax cuts last week from the Chancellor. We had a similar sort of tax cutting pledge back in November, and that doesn't seem to have moved the needle in terms of the polls for the Conservative Party. But let's see. There's still time to go.